A sweet quarter. Hostess Brands shares are hovering near a record after the company saw sales jump 25% in the first quarter on the back of strong demand for Twinkies and Voortman cookies. But the snacks brand warned of more price increases to combat the impact of rising inflation. Joining us now to discuss is Hostess Brands CEO Andy Callahan. Andy, always nice to see you. Your revenue was quite strong in the most recent quarter, up 25%, and 10% of that was just higher prices. Are you surprised consumers didn't balk at that type of increase?
Yeah, well, 10% was price mix, and always good to be here, Brian. The consumer has proven to be resilient, and I think one of the drivers is obviously elasticity impacts all consumers, and we price as a last resort. But what we're seeing is the macro trends in the categories in which we compete and the occasions in which we compete are ruling the day today. Consumers are at home more, they're snacking more, they're back on the go. Our Voortman and Hostess portfolio is performing very well. So we watch the consumer behavior very quickly. We remain a very accessible and affordable sweet treat for those consumers. And to this point, despite having that pricing go into the marketplace, which we take very seriously, but is necessary given the inflation costs, we've seen a very resilient consumer.
We've talked to a lot, Andy, throughout the pandemic. And I remember, I can't believe it, almost 2.5 years ago or 2 years ago, where we had consumers stocking their pantries with Twinkies and cookies. But it does appear the consumer is changing just in terms of behavior, something I saw in Kellogg's results this morning, too, as well. Big gain for them in snacks. What are consumers purchasing specifically?
Yeah, well, we're 100% pure play snacking company, and that really positions us well. And one of the things we mentioned and talked about back then, Brian, was snacking was growing before the pandemic, during the pandemic, and we're very confident that it's going to continue to snack after the pandemic. And we compete primarily in 5 occasions where we really focus. It's $50 billion addressable market, and we really focus on those. Consumers are starting their mornings with sweet treats. We're big in breakfast. Our breakfast portfolio is performing very well. We compete in lunchbox, afternoon reward, on the go, as well as sharing. We innovate in those spaces. We have brands and product quality that consumers want in those spaces. But the indulgent snacking space continues to grow. We estimate that it'll continue to grow in the mid-single digits, about 5%, and we're well positioned to capture that with our assets and agile business model.
You know, as you think across what the consumer is looking for right now, and then additionally, how the consumer is looking at what's in the package at the end of the day, I mean, we're monitoring any type of shrinkflation that takes place with the amount of price, the increase in prices that we are paying. Is that something that Hostess has had to implement at all? Is that something that even takes into consideration when you think about the products that are making their ways into backpacks, into corporate offices, and so forth?
It does. The majority of our portfolio is individually wrapped. We do have afternoon sharing, new ideas. Our new Crispy Minis is doing very well. But if you step back, we compete in a category and a need state that is an individual consumed predominantly. So we have really rationalized the portfolio to be more efficient for our customers as well as our manufacturing lines. And we do have an advanced revenue growth management process where we really look at pack size and make sure we optimize it all with what the consumer needs as the starting point. But that's the benefit of where we're positioned. We've invested in product quality to give consumers a great experience. We're individually portioned so they can snack in a very responsible way, and we make sure that they come back for more. We've increased our 2-time buyers in our category at a rate twice the category. And that really means that we're increasing our loyalty and they're coming back. So we're well positioned with our portion control.
Yeah, Andy, count me as one excited about to try those new baby Twinkies, as I am calling them. Look, we have the market down a lot today after the Federal Reserve meeting, and there's just this view that inflation is just going to continue, at least here in the short term. Do you see any peak in inflation in your business?
I'm not in a position to call the peak. I thought we may be able to have said that last year. When we started the year, we thought inflation would be double digits. We've now revised that forecast to be more in the high teens, and we're seeing it across a broad-based basket. We're seeing it in our commodities, wheat and eggs, and some other things that we cover. We're seeing it in our fuel costs and transportation. We're seeing it in packaging. So it's difficult for me to see the peak. Now, as we look at 22, we believe we have a good line of sight to inflation. And what's most important is the way we look at our business, we're continuing to invest in that growth, even through the inflation, because A, we bring a good experience to consumers as we invest in our labor force, our product quality, our innovation and marketing accessibility. And we do it in a way that still maintains industry-leading margins and industry-leading growth. So I do not see a peak in inflation. I have good line of sight, I believe, to 22 at this point. And we'll be really agile as we continue to grow our business year after year.
Well, looks like the market agrees. We just saw your stock briefly go in the green, reverse some of those earlier losses. Always great to get some time with you. Andy Callahan, Hostess Brands CEO. We'll talk to you soon.